Yo, so what's going on with these CP2000 notices that you might be getting? Well, these are IRS notices, and the purpose of these notices is to let you know that the IRS thinks that your tax return, your reported income, and your taxes paid is actually different than what you actually filed. So this is what the IRS thinks, okay? And so you usually would receive these notices 1 to 2 years after your return is filed, because it takes the IRS time to process your return fully and to reconcile it with what's in their system. All right, so first of all, you might be wondering, how does the IRS even know what kind of income you might have versus what you reported? And if they know that, shouldn't they just file their tax returns for you, and we don't have to go through this silly dance every year of trying to find a CPA or do your taxes on TurboTax, finding deductions and all that crap. So why is there this problem? Okay, so first of all, when you work for an employer or when you work as an independent contractor, the employer issues you a W-2. Independent contractor maybe will issue a 1099 NEC. If you have stocks, you will get a 1099 from your brokerage firm that reports interest that you made, dividend income, stock trades that you've made, capital gains from those. Those statements all get reported to you, and you use those statements to file your tax return. Those statements also get reported to the IRS. So the IRS has all the data from those statements, and so that's why when you file your tax return, the IRS can kind of compare the two, what their records have versus what your records have, and see if you have underreported income at all. Okay, so this usually happens when taxpayers forget, they might forget that they had a 1099 from their stock brokerage and that they made some stock trades in the year, they had some capital gains, and they didn't report it on their tax return, but the IRS now knows that they have those capital gains and that they should report it on their tax return. So if you didn't report that, the IRS will reconcile the two, see that it doesn't match, and they'll send you a CP2000 notice saying, hey, we actually received information for this income, and you didn't report this income, so now you owe additional taxes, plus interest, plus penalties, all that good stuff, or fun stuff, whatever. The problem is sometimes the IRS is not correct, or I would often say they are often not correct. Sure, the income that they show on their ends might be correct, but typically there might be expenses that are related to those incomes that the IRS does not know about. And this is why it's important that you file your taxes, and this is why the IRS does not file your taxes for you, even though they know all your income, is because only you know your expenses related to that income, okay? And if I'm talking about a W-2, that's irrelevant. You can't really deduct anything against W-2 income, but if you got a 1099 NEC, 1099 miscellaneous, or 1099 for rents, for your stock trades, there might be more information that you could provide to the IRS that would lower the proposed tax bill that they propose to you. Another thing to keep in mind, those CP2000 notices are just a proposal of additional taxes assessed. It doesn't mean that they have done it yet. As long as you respond to the notices and either protest it or just pay. If you just protest it and continue to protest and respond, they will not assess those taxes until everything's agreed upon. Okay, but if you ignore the notices, they will send you another notice, and then they will just go ahead and assess those taxes on your account. And then you probably could still respond and get them changed, but the process is just taking that much longer and accruing that much more interest. Usually, if let's say you're an independent contractor and you forgot to file your income from from a 1099 that some employer or some independent contracting employer issued you, then the IRS might say, hey, you forgot to report this income, and so you owe this much taxes. But since you're an independent contractor, you might have expenses associated with that income, like mileage or meals or various other expenses, business expenses that could be used to offset that income. And so that's an opportunity for you to respond to the IRS saying, yes, I agree that I failed to report this income, but if I did report this income, I would also report these expenses. And so the income that you're proposing is too high. As for stocks, stock trades, usually the interest and dividends income, that if you didn't report those are usually correct. It's the stock trades that you have to take a look at, because sometimes the stock basis are not reported to the IRS. So that means, I'll back up for a second. Stock basis, what does that even mean? stock basis is the purchase price of the stock when you originally bought it, okay? So when you sell it, the capital gains income should be calculated as selling price minus purchase price. But sometimes the IRS does not have the purchase price information. So if you sold the stock at a selling price and they don't have the basis information, they're gonna think your capital gains is the entire selling price, when for many cases that's not true. Many cases you gotta take the selling price and you gotta subtract the cost basis, and then you get the final capital gains income. And so when you're looking at CP2000s with changes for 1099 stock brokerage trades, that's something you want to really take a close look at. Get your stock brokerage statements, because your statements should have basis information. Sometimes they don't, and you have to do some research, but for the most part they have all your basis information. And there are sections that even say these basis numbers were reported to the IRS, and there are other sections that say these basis numbers were not reported to the IRS. And those are likely the ones that you got to pay more attention to, the ones that were not reported to the IRS. You got this letter, you got this notice, says that they're proposing a whole bunch of additional taxes. The worst thing you can do is ignore it, okay? The second worst thing you can do is panic, although understandable, because I've seen some pretty incredible proposed taxes, $500,000, addition when the true amount was zero. So yeah, don't panic too much. Maybe, allow yourself to feel some worry there, but contact somebody who is a professional that can help you respond to it, because they know how to do it. They know all the different tricks that can probably get the IRS to lower their number, if not eliminate it entirely. Okay, so just know, although the IRS might be correct on some things, they're still missing information, so changes have to be made to their proposal. So a proper response letter would be appropriate, and if you're missing like a independent contractor income, you would probably file a Schedule C. You would submit a Schedule C sample with your response letter. If you were missing stock trades, you would submit Schedule D and Forms 8949 with your response letter. So just be thoughtful in your responses, but best thing you can do is probably hire a professional to help you navigate that, because they know all the requirements, or they should know all the requirements needed to kind of prove your case and to lower your proposed tax amount. All right, that's all I got. Thanks so much for watching. If you're new here, please subscribe to my channel. I'm gonna be always providing content that will hopefully help you in the future. And obviously, if you found this video helpful, give it a like and share it with your friends if you could. I would really appreciate that. All right, take care. I'll see you next time.